Hey, left, right out here. Back after my long trip. It's the 15th, end of Friday, into the market. The market's surging. They surged yesterday. It's up again the Dow's up another 1%. The Nasdaq's up it's up about 0.5%. But yesterday, man, it was up big. I was on the way back and I happened to see it. I heard about it. S&P 500, 35 points, it's hovering about that 0.75%. It's pretty. The VIX is getting crushed. The volatility is getting crushed. Other things. Oil is up. We're at 82.30. It's an incredible run. I think they printed an $85 mark on the Brent. Gold is selling off. It's down almost 1.75%. Doesn't make any sense. Okay, so here's the news that I got yesterday that kind of plays into this. So the Fed let out their taper, which that doesn't make too much sense. So check this out. So this is what I'm thinking. They let out their taper. I think they're tapering $15 billion a month until starting in mid-November, till that it runs its course. So they're doing 120. If you don't recall, 120 a month, 40 billion in mortgage-backed securities, and the rest in various treasuries. And then of course they have their own trading desks. There's a lot of other things besides just what they're talking about taper and their interest rate manipulation. So they have to get through this taper before they can raise interest rates, or theoretically. Otherwise you're just doing some kind of weird market. You're already doing market magic, but who knows what they can do. But just because let's say they get through this this 120 billion, they still have to buy certain assets in order to keep the interest rates as low as they are. They have to they have to give the market that signal, because that's what the interest rate is giving a market a signal of excess savings. So they have to present that in the money supplies to a certain extent. And we get into that. But anyway, the 10-year's at 1.57. So here's what my question is on this. So if you look at when they're tapering, so theoretically, if I haven't looked at what the Treasury, what they're rolling every month, to be totally honest off the top of my head, but I know what's happening is they're taking 15 billion out of the market. And I didn't look at how much of that 15 billion every month is going to be MBS, mortgage-backed securities. But let's say that five billion of that, so 10 billion in treasuries, or treasury-related securities, whatnot. So that's $10 billion that has to be shaking the can. $10 billion that has to be made up by the private sector of some sort, the prime dealers, who are in that market a lot of ways through their advisory businesses, or if they manage different funds, and somewhat through the Fed, because a lot of time the Fed uses the primary dealers to purchase these securities and take them off their hand. That's one of their tools, right? So anyway, there's going to be upward pressure, or you call it downward pressure, on treasuries, on the bond market, and you should start seeing that yield start rising up. In my opinion, that's what I think. It would pressure the Fed to do something, or to scale back on their taper, because we'll see that. What I told you about that precipice, when you hit a certain level in the risk-free rate, it starts making these other investments in these more risky assets a little less enticing. So you could see a sell-off then. But we'll keep monitoring that, because that can happen. That's a lot to unfold. It's so complex. Nobody can really give you. Somebody can be completely lucky. Crypto, Bitcoin, almost 62,000. That's an incredible move. It's pulling up a lot of the major other cryptos. So there's a lot of liquidity. There's a lot of money flushing around. But here's one of the reasons why the market has been up too, which I don't know why with the tapering thing, why it would be, but they are ecstatic about the bank earnings. Goldman comes out, blasts earnings. Bank of America. If you look at it, I didn't get to really dig through it, but wave top in the articles where it looks like it was on their advisory and trading businesses, which of course, I don't know why this is a big deal, why that's blowing the market up. The stock market's been up; it's been propped up by the Fed. Of course, they are. It's essentially they're trading their own book. They know what's up, so of course they're gonna have great trading numbers. Now on the advisory side, that seems specious too. That's not really. To me, these earnings aren't representative of any kind of productivity in the economy. This is more like financial, malingering or whatever. They're just hanging out, living off of the central bank's policies and fiscal, incongruities of what's going on. So I don't look at these as like some kind of beacon of hope for the economic system that we're living under. I don't see that as an economic beacon, is what I meant to say. But then you look at consumer spending. So they come out and say, oh, consumer spending is off the charts. So, or it came in a surprise up number for September. Well, you know what? The weird thing is when I pulled that up, right, which you counter that with the sentiment number that came out. But you pull that up. I had that up. Hang on. Retail, yeah. Anyway, I had the article pulled up. I don't know what happened to it, but they were talking about it with that number it beat. But yeah, you look at where it beat and where it declined. That's kind of weird because some of the consumer electronics and whatnot, which there might be there's a lot of nuance in that stuff, but it's nominal. So it doesn't really take into account inflation. Even if it did, they're using CPI numbers that are skewed because the CPI, which we know is like it's hot, yeah, because it's going up. But that number is so cooked, it's not even funny. We have 30% of that. It's based off, some rental, like what do they call it, the rental equivalency, or wherever they just ask people what they'd rent their property out to themselves. Then other portions of rent are on there that's massively underreported. Then they skew it from energy prices, whatever. That number is so suppressed, it's unfathomable. So if you're deflating it based on that, you got, even if you did that, that's a specious argument at best. So anyway, it's nominal, yes. But if it's nominal and it's not deflated at all, that's even more of a case for the consequences of an inflationary policy. That is inflation, right? It's manifesting in that, and in consumer prices going up. Now, anecdotally, when I go to a McDonald's now, because I was on the road, I don't like to eat like that, but I went ahead and went into one of them. And I actually walked out because here's why. I walk in there. I remember going to McDonald's not that long ago, and I can get like whatever, number 2, whatever meal or something like that for like $7, maybe $8, depending on where you're at because of taxes or whatnot. But I went into one and it was $12. I turned around and I walked. I was like, I did it on the kiosk, so I didn't like make a scene or anything. I was just like, I'm not paying $12 for freaking fast food hamburger and some, oil cooked fries. It was ridiculous, completely ridiculous. Now they do have, still like get 2 for 2 sausage McMuffins in the morning. That's okay, but it was incredible the amount. So you look at that kind of price. That's a 100% price increase from or almost 100% from the last time I remember that. At best, a couple of years ago. And that could be, varies region to region, wherever the source is. But either way, I went through the entire Southwest, all the way back, all the way to the Midwest, and they were all. I didn't get I went into various McDonald's just to check it out after that, and I couldn't get that same meal under $10. So either way, those prices have just skyrocketed, and that's been a phenomenon the last couple of years. I understand that, but then I remember I talked about the eggs. Eggs up like 20%. I go and I look at another item up like 15-20% in the grocery store. Incredible price hikes that I have never seen in my lifetime. Gas. I saw gas $5 at one place. It was like, $4.90 something for a premium, and then you're talking about in the 4s for the 89 octane, 87. Incredible moves. Like, you can't tell me that that's not affecting people. It is. I think it's underreporting. I think that we got this current administration. They're suppressing whatever they can. People are hurting. I know that. And you still got people. Here's another story. So we're having these shortages, right? And they're telling us that Christmas is pretty much over for getting toys. You better get them now. But I don't know. Maybe that's the case. There's going to be all kinds of craziness that can be not predicted just because of where we're at right now in our current economic situation. But they're saying, you've seen the Southwest thing where if you didn't understand that the media's propaganda, then just look at the Southwest thing. Obviously, those guys are protesting, and the media is trying to tell you that it's weather, and whatever. They're saying it's weather and sick out. It's the biggest, most bad. Everybody with a brain can see that that's not the case. They're lying to you. But anyway, so you had those guys walk out. You have a number of hundreds of thousands of health and care employees getting fired. Now you have the retail holiday, which normally you start bulking up on your hiring this time of year for the holiday season. Well, while they're coming out with those plans, you got supposedly 720,000 people, retail workers, just quit. You have 4 million. This is probably included. That number's probably apparently 4 million people quit their jobs, which is not necessarily a bad thing if they're doing it for the right reasons. But if they're being pressured from some kind of mandate, then that's craziness. But because you think about, there's always going to be a certain number of people that either are going to a different job, or maybe they're starting their own thing, which you can't fault anybody. But when you see these massive numbers like this that are correlated to some kind of policy that's been, it's not even in the books right now, but it's being pushed on somebody, then you kind of can draw that conclusion. There's a lot. We got supply chain disruptions for Ford again. There's just some craziness. And then, okay, so the last thing, I'll end this. I'm going to keep it quick, and then we'll start going back next week. But I got to listen to Rogan questioning Sanjay Gupta about CNN and basically admitting they lied. And I finally listened to some of the CNN clips. And I haven't watched CNN in God knows how long, besides maybe at an airport a few years ago. But it was amazing, the propaganda and how they frame stuff. And if you unplug yourself from the media, and that's Fox News too, and you go for a while, like I'm talking 6 months to a year, and get your news elsewhere, read books. Like, where do I have this is a good book I was reading. The Path Time. I had another one, 1984, and The Animal Farm. That's a good one. You read books, then you come back and you watch like a CNN. Just pop them on, and once you're untethered from that kind of propaganda and you go back to it, then you really see like how skewed and how problematic the reporting is, and how they almost overtly lie. If not, they definitely manipulate truth in about every story. And if you've ever been involved in something that's been reported by the media, you realize that what they do report is vast, sometimes at best along parallel the real story, and at worst contradictory to what actually happened. It's pretty amazing. That's about it. But anyway, that's it. I'll talk to you Monday, and we'll go over some of the markets, because hopefully there'll probably be some big moves. This feels like a giant pump, in my opinion. When you have this much, when you see the volatility crash the way it is, you have this much complacency in the market with this amount of bad signals in the market. When you talk about the inflation deal, when you talk about the employment situation, the inflation situation, the employment situation, the supply chain situation, the trade deficit, which has to do with some of the supply chain, has to do with some of the, but the dollar situation, the way gold is acting is really weird. Oil, energy costs. When you see all these things happening, it really is setting up for just, I don't know when it will happen. The bond market, now we're at 157. So these things are all starting to get into, I would call, an orange zone and almost a red zone, where you need to watch out for like a huge correction of some sort. When somebody finally sees like the signs that are written all over the wall that a lot of us have seen building up and presenting themselves. And then you'll start getting some selling. And not to say that they won't pump it back up, because I think that's the next thing. I think that's the dollar crisis that you're looking for, is once we have a huge, massive correction, you see the Fed revert back on their stance of tapering. And like I said, even if they get through this whole taper thing, let's say they get through the 15 billion and they can't get, like this last time they got to 2.25, and even with a good, with a more favorable administration business-wise, it didn't last, right? They had to step in. They were already doing different things on the overnight, in the overnight markets, the overnight lending markets. But anyway, I say they can't even get to 1. I can't see them getting how much the money supplies, how much malinvestment, how much the money supplies increased, how much leverage is out there in the system. I can't see them getting past 1%. And this thing, the wheels just really start. The wheels are rattling right now, right? The wheel bearings are going out. The wheels are rattling. But once you get to about 1%, you start seeing things just come completely unglued. That's my prediction, and I know that's kind of going on a limb, but I just can't see them getting to, if they ever get to 1%, then immediately they're going to have to reverse, come back in, even massively more QE than they have now. You think 120 a month is insane, which we thought, 700 billion was insane in '08, right? Now we're been doing 120 a month for God knows how much. And I can't even remember what we were doing after, because there was multiple QEs, if you remember. But if you think that's insane, wait until you see after this next even little blip in the market, when you actually have a real correction, or just an actual 20 to 40% correction in the market. Wait till you see something like that and see what the Fed does and see where we're going next. It'll blow your mind, and that's where you're going to have that dollar crisis. You're going to have a crisis. We're going full bore to it. But anyway, I'll talk to you later. Peace.